Welcome back, everybody. Today I just wanted to go over a quick trade breakdown of the 497 calls that we took at around 11:22 Eastern a.m. The first thing I wanted to go over was why was I so bullish during this morning session. So what we're going to focus on is this gap right here that happened on the 19th of April to the 21st of April. As you can see, we had all these equal lows that got taken out to remove the liquidity that was resting below these lows over here, equal lows. What I want you to pay attention to is, let me get rid of this equal lows line. What I want you to pay attention to, and I'll try to highlight this with, let's do a circle. Focus on the high of this candle before we had this gap up, 5,006 on ES. Where did we bounce from today during the cash session? The low of this candle, 5,006 right here. So we have 5,006 on the low here, 5,006 on the high here, after sweeping equal lows. So after we had swept equal lows and we found a nice bounce spot from 5,006 from the gap up that we had previously, I turned bullish and I alerted this trade on X as well as my Discord community. I said the 497 calls had potential at 11:19. The alert came at 11:22 a.m. Eastern time, as well as Twitter. The alert came right around the same time. So let's dive into Thinkorswim and let's really go into the 1-minute chart. That's where I grab all my entries from. I am an options trader, so obviously I'm going to trade the option as well. So I pulled up the option contract chart of the 497 calls. So keep in mind, we had swept the equal lows, bounced from that 5,006 spot from the gap. What I noticed here was this push up, the sweep of this intermediate term high right here. We leave a 1-minute bullish fair value gap right here, as you can see. Let's make this a good green color right here. I'll make that green. As well as if we really dive into the contract chart, this is my special sauce. This is how you get the most precise entries, in my opinion. Let's go from the high of this candle, which is 64, to the low of the next candle, which is around, I believe that is, what is that, 67 right here. Another bullish fair value gap. We'll highlight this again. A nice green color. We'll make it more transparent. And on this play, I think I only risked about, 11 cents. Risked about 11 cents on this play. So entry came at 67 cents. Right around 11:24 a.m. Stop loss is right beneath these lows, under 57, put it at 56. So we have our trade planned out. Now the best thing with the option contract chart is not only can you get very precise entries, you can get very precise targets of where to trim your contracts from. And this is something that I really like to stress with my Discord members, with my Twitter community. Anything that we trade above these old highs, any price above recent old highs on the contract chart, whether it be 91, whether it be right here at 73, whether it be right here again, $1.47, ultimately we traded up to, just around $2. This looks overwhelming and it looks like there's a lot on your chart, but when you structure your trade out and when you plan it to only risk 11 cents for a potential gain of 40, 50, 60 cents even, I like to take it to my Discord because this is where I type out in real time what I'm doing. The first trim came at 79. What was that? 4 minutes after the alert came out. So let's go right here. 79, took that trim right above old highs. Took that trim right here, 79. Let's get rid of some of these drawings as well. As we take our trims, as the play is pushing in our favor, what I like to tell everybody too is let's try to make the trade risk-free. So 79, we took a trim, stop loss at 59. Instead of risking 11 cents, we're risking 8 cents. Contracts move up to 94, we take a trim, move the stop loss up to 75. By the time the stop loss is moved up past break even and past our entry price, the trade essentially is risk-free and you can just hang on to your runners as long as possible. Now, what I want to get into too is let's get rid of all these drawings here. Let's clear the drawing set. I missed out on a boatload of money today, right? These contracts bottomed at 57. I had them at, I believe, what was it, 67. They ran all the way up to $5.40. You're never going to sell the exact top. You're never going to buy the exact bottom. As long as an options trader, you can catch a big chunk of the move and trail your stop and manage your trade and make it a stress-free trade, the more repeatable trades like this that show up in your system, the more successful you'll be, and the more successful you'll be at recreating trades exactly like this. So again, old highs on the contract chart, one of my favorite ways to trade. Even with SPY, looking at the SPY chart, entry came, right at this fair value gap. Above these old highs, take a trim. Above this displacement candle, take a trim here. This high up here. Today was a crazy day. These equal highs up here, took out a lot of liquidity up here, and then high of day was broken right at this level at 498.22. So this is how I structure my trades, and this is something where I can see at least one or two of these opportunities every single day. Whether you believe it or not, they're present in the market. They'll keep repeating themselves, and there's an abundance of opportunities. So thank you guys for tuning in and just checking out this trade. It was a fantastic trade. Ended up getting out at 170. Put the stop loss up. 185% trade. Really smooth, really, really clean. So appreciate you guys. A lot more to come, and let's keep making this money. Let's keep banking. So take care, family.